Hello and welcome everyone. Today we will be covering some on-chain analysis for Ethereum, for Bitcoin. We will be looking at how do you find that market bottom? How do you find those tops? Most importantly, when should you just deploy all your capital and buy everything you can? So I will be covering some activity in terms of active addresses on Ethereum. I will be explaining a little bit on what I like when I see a chart and where I'm looking to really accumulate those long-term bags, and how on-chain can help us decipher where is the best time to buy. So we will be covering a lot of on-chain data. So stick around for some of that good information. All right, welcome back, everyone. This is the Ethereum chart I am looking at the moment. We have that clear top over here. I'm just going to clean it up a bit in terms of the Burbicator Pro that I'm using here to really get confirmation on those long-term trends on the weekly. So I'm going to close that down real quick. We can get a cleaner chart so we can really see what is happening. We have the top in 2018 here. We have the second top in November 2021, but really the top that matters is the top in May. Why does this top matter so much? Well, because on-chain, this was the real top, and this second was really more a distribution, accumulation zone. The price was driven a lot more by derivatives and by open interest versus spot price. So what does this mean? What does it mean moving forward? What's happening? Where should you buy? So let's jump over to CryptoQuant. They have some great information here. So on CryptoQuant, we can actually see the long history of active addresses on Ethereum. We can actually see that 2018 was a huge top in terms of activity. We had so many active addresses participating on Ethereum, using Ethereum. And we had that clear top and then dropped off during that first sell-off towards March. We had a bit of a bounce in activity, but really we did not get a bounce. We just continued to bleed users. Everyone was leaving the space. No one wanted to talk about crypto. We had a little bit more attention here in 2019. Again, we had that second drop, COVID. Right before COVID was really just December 2019. No one was talking about Ethereum. No one cared about Ethereum. The price was hovering right around $130 on Ethereum. We had a little bit of a push in February until finally COVID completely tanked everything. Price dropped all the way to almost $80 on Ethereum, which is just crazy to think about. But then, pretty much since the end of the year 2019, from the beginning of 2020, attention seemed to be coming back to Ethereum. And we had that steady climb. We had DeFi summer in 2020. Users were coming back. There was something to do on Ethereum. Finally, we had that crazy top in May where we had that initial Ethereum top just under 4K. And then we had that drop off in May. And that was the real top. Over here in May, we can kind of measure the attention top overall. And even though we did have some more attention coming than that second top in November, really the focus is the higher lows. Even though we've had that big drop off, we can see that users have been sticking around using the network as much as possible. We haven't had this very steep drop off that we had back in 2018. And this is very important when we're talking about on-chain, when we're talking about how much lower can Ethereum go? Where do we want to be buying? If we jump over to Bitcoin, actually, we can get a very similar idea of what has happened. I'm just going to change the chart price to logarithmic, as that's what we use for trading, but linear for the active addresses, so we can have a very clear picture of what's happening. Again, with Bitcoin, we had that top in 2018. People completely disappeared after that. At the very bottom of Bitcoin in 2019, people seem to be starting to come back, but really we can see that active addresses stayed pretty low until pretty much 2020, similar to Ethereum when they started to climb at the top in May. Again, we can see why this was a top when you compare user activity with the price. May was the real top. That's when retail was all in, new addresses, everyone was transacting in Bitcoin. We come down again, and in November, there was not the same activity. People were not interested in Bitcoin anymore. So we can see that the second top was led mostly by open interest and derivatives trading versus simply retail spot buying Bitcoin. So active addresses really tells us how much interest there is on the network, how much interest there is, not only interest, but how much activity we're actually getting. Um, so these are two very, very useful clues in terms of why or what is kind of the most uh, key thing to watch out for in terms of tops, but not only that, also in terms of bottoms. Where are people completely leaving the system? That's what we want to find. Where should you buy because everyone else has given up? That's the most important. We can see that bottom in the summer in terms of activity. We had right around 35K, but really had that bottom, like that average bottom was right around that 30K in the summer. So far, activity has been relatively flat. We haven't had that big drop in activity yet in Bitcoin. And that's what I'm waiting for. I want this flat drop we had in 2018 where people really gave up. No one was talking about Bitcoin for almost a week, December 2018. That's where the very, very bottom happened. People just didn't care. So let's hop back over to Ethereum real quick so we can see some more information in terms of what is happening. So we'll go over to derivatives and we can actually track the open interest. Open interest is very can give us very good information in terms of what's happening in leverage and why certain price moves in certain ways. So we can see that the first top in 2021 in May, we had that spike in open interest, but it wasn't as large as the second top. As we remember, I just showed you, active addresses were definitely not as active in the second time around. So there was less people driving the price, which means there was more leverage in the system. And that's why we had kind of these couple tops and then these big leverage flushes on the way down. It means a lot of people that were sticking around were over leveraged and they were just using that over leverage to power that price up. So we can see what happened with Ethereum in the second top, and we can just see kind of how we had these leverage flushes, most importantly in January when the price kind of finally gave in. We had that January low on Ethereum, and then again we're having that second flush now in May when we have that second low and really flushing out margin out of the system, open interest. So open interest is a very good indicator in terms of how much people are interested, but also how much trading leverage there is in the system. So we want open interest to drop overall so that we can get a good measure of, are we bottoming? If open interest continues to climb as we did, as we saw in that second push up, that means that people are still sticking around, they're still trading, and we haven't found that bear bottom that we really want to see. If we hop back over to Bitcoin, we can see the similar effect on open interest, where you have this first top in May, but then really the second top was the big open interest. We made new highs in open interest, higher lows overall in open interest. And we had those clear flushes in Bitcoin. We had that first flush in September, second flush in December, and finally, we have another flush now in May in terms of open interest. What does this mean? Well, it's liquidation cascades. People are getting liquidated pretty strongly as price goes down. Why does that happen? People are over leveraged and are forced to close positions or they're going to be margin called. So I hope this is getting to all your questions. I'm trying to kind of go quickly explaining open interest, explaining active addresses, and just breaking down what's happening, how can we catch these bottoms. So next, I'm going to go to the MVRV score, MVRV ratio, sorry. MVRV ratio is a great metric to kind of see bottoms as well as tops. So if I zoom out a little bit, we can see how clearly the 2018 top happened. And let me just switch over the chart. Metric should be linear. And I like to view my price logarithmic because that's how we trade over here with the right now it's linear, but really we trade logarithmic charts. And then I like to use the linear on the actual price or on the metric because it gives us a good view and it gives us a good contrast versus the price. So here we can see MVRV ratio. We can see the clear top over in 2017, 2018, right at the end of 2017. And then that bottoming out, people just completely giving out and into that oversold. Finally, we get that second bottom in COVID, and then that first top in May. And we can see how during that second top, we didn't actually reach that oversold in MVRV. And why is that? Well, that has to do with what I mentioned earlier in terms of open interest and leverage. So it really shows how people were mostly leveraging, and the average price of spot Bitcoin wasn't trading as hard as the leverage or the futures Bitcoin was trading. So if we zoom out a lot more in terms of MVRV score, we can get a better understanding of how these tops are measured pretty perfectly. These bottoms are always caught or at least close to. And what can we see now? Well, we're getting really close to that nice green zone. So before you say, I'm going to sell my house and buy Bitcoin, remember, 2015, it took almost 6-7 months, almost a full year in this oversold range in that long bear market. 2018, it was almost 5 months before we finally climbed out of that bear bottom. And it was almost 2 weeks during COVID where we climbed out. So considering the macro environment, there's a war, there's interest rate hikes, there's inflation. How long can we expect for this bottoming to play out? Well, we can't tell exactly. We could expect anywhere from 4 months to maybe a full year of this bottoming area, but it can give us a good sense of when can we start to DCA. Currently, Bitcoin is right around 30K. It's hovering right below it, just right around it. And we can see we haven't quite tapped into that green, that oversold ratio area. So what do you want to do? You might just want to wait a little bit longer before you start dollar cost averaging into Bitcoin. You want to wait until we're really in that oversold. Maybe price will drop to 24K, 25K. And why am I bringing these specific prices or these specific numbers up? Am I just making it up? How did I paint this accumulation station that I've written out on Ethereum? Why am I picking this specific price for Ethereum? If I jump over to Bitcoin, I have a similar price range painted out right around here, which is the accumulation station. Range would be this one right here. So why am I painting these ranges out? Why do these ranges matter? Well, let's talk about that specifically. So we can see anywhere between 24 and 19K are the sweet spots for accumulating your Bitcoin, getting as much as you can. So if I hop over to Glassnode now, we can see some of the interesting charts. And the reason I'm using Glassnode now is just because of how CryptoQuant displays the realized price. So we can look at realized price right here, and we can see kind of how it's a very good metric in terms of the bottoms and tops again, but most importantly for bottoms. The realized price is essentially like a moving average for the average price that Bitcoin has been transacted at for the past so often for past years or so. So for its whole history, the average price that Bitcoin has been sold or traded at. So we can see that whenever Bitcoin trades below that average price, it's bear market. It's deep in the bear market already, and essentially Bitcoin is being sold for too cheap. That realized price does not really reflect the average price, or the price of Bitcoin is not reflecting the fair price. We can see that 2018 bottom had a very similar realized price a long time. It matches with the MVRV score that we just talked about. And right now, we're not quite at realized price. So if we zoom in quite a bit more, we can see where the realized price sits right now, which is right around 23, 24K is where that realized price bottom is. Usually we get a first bounce off of the realized price before we break below it and really make that bottoming pattern of Bitcoin on Ethereum as well. I'll jump over to that one. So we can see that right around 23K, 24K is that range of where the realized price is, which is this box I have painted out for everyone. This nice box over here also reflects that if I zoom out quite a bit more, because I'm looking at the weekly, we can actually see the top in 2018. And we can remember that Bitcoin would almost always retrace to that top after these long cycles. It would retrace to that previous top. And once it retraces, it makes that nice bottoming pattern, that long bottom before it finally comes out of that range. So looking at these bottoms, looking at these tops, we can get this nice range of where we want to accumulate. If I were to jump over to Ethereum, we can see the same thing. The top on Ethereum shows a little bit of that support resistance. We had that nice retest on Ethereum for that top before moving up. And we have now this accumulation range between right below 2K, I'd say 2700, 1700, right down to 1300 is that really sweet spot of that bottoming range for Ethereum. So if I hop over now to the realized price on Ethereum, we can see where that sits at the moment. So we can see Ethereum has already been almost bouncing off of that realized price. The realized price on Ethereum is 1800. And we can see we have kind of bounced right off it. If we zoom out and get a full history of Ethereum, we can see that after 2018, it didn't break below the realized price. It first had that bounce in April, and then finally broke below in August. And we had that long bear market, that long bottoming pattern similar to Bitcoin on that realized price. So we can see how that has been evolving, and we can see how long it took us because it behaved very differently than it did with Bitcoin, because we actually broke back above the realized price for a couple weeks, months, and then broke back below it before finally really clawing our way out in May of 2020, which matched up with DeFi summer. So what do we expect now? Could we possibly bounce here? Well, that's what I have painted out here. I think it's very likely we bounce, or we get some form of bounce, whether it be after some flat action. We get some bounce up to 2500, 2600, and then finally that rejection is that nice long line on 2600 before we break down further. That would match up with that realized price of first bouncing and then breaking below it as we did here. So as we can see, if I zoom into the current time, we can see realized price is right under 1800, and I have it painted here right under 1800, that nice sweet accumulation. If we match realized price to our support resistance zones, we can find that real sweet spot for accumulating Ethereum in the long term. So I covered a couple different metrics. I hope that this was helpful for everyone. I'll finally be just covering MVRV score for Ethereum, so we can see, are we in that oversold area? So MVRV is not on CryptoQuant for Ethereum, but we can actually find it for on Glassnode. So no problem there. MVRV Z ratio on Ethereum is right here. We can see we are hovering right above that green zone. We didn't quite reach the red comparing to 2017. So MVRV on Ethereum doesn't quite work the same way for tops, but it does for bottoms. As we can see, we have these long bottoms over here. So it's very interesting to kind of compare MVRV versus Bitcoin and Ethereum on how the two charts behave. So as we can see, we're not quite in that oversold range, and we can go quite a bit below that oversold range as well. So it's going to be very interesting to track this price action, to see how it all evolves, see what happens next. Again, I have my accumulation zones painted out. I will be patient. You can play the price action here, because even though this is the range and this is my initial price target or price action that I'm looking at, we could have something happen where it just kind of stays in this range for a while before finally dropping down and then coming out. So I am going to be very patient here. Bear markets take a long time to play out. Bottoms take a long time to form. So I'm not going to be quick to judge. I'm not going to be jumping on anything. I have to understand my time frames and time frame psychology. How long do I expect things to play out for? And that's the most important thing when you're deciding how you're going to trade. Again, that's why you can check out the Bird Nest. You can ask questions there about all different time frames, about psychology, about the best thing for you in terms of trading. So hop in the Discord, hop in the Bird Nest. I'm happy to answer questions there for anyone that has them. Otherwise, drop any comments in the video. Happy to assist there. And I'll catch you in the next video. Peace.